Thanks, Mr. Yap, for your insights into the implication, role, and applications of AI in the world around us. You also highlighted, how bloggers and publishers, hopefully not referring to dollars and cents, may be wandering into a gray area when it comes into investment advice, right? But for sure, KOLs are definitely more adept at capturing audience attention when it comes to content than an analyst may be. So in any case, I just want to say that at dollars and cents, we also use some generative AI tools for our content, something that I didn't really imagine using just 2 years ago, very, very short time ago. I didn't even imagine that we'd be doing it. Today we are doing it, and I foresee us doing it more and more going forward. So I think what you say really has a lot of legs into the foreseeable future and even in the long-term future, right? And it feels like the more I talk about this thing, the deeper the hole I'm digging myself into. So let's get started into this panel. Thanks everyone for spending your afternoon with us. Those of you who are logged in, I can see about like 70 plus people. I'm Dinesh Jayani, co-founder at Dollars and Cents, a leading personal finance publisher in Singapore. Recently, we've also expanded into Malaysia and started our podcast series, The Building With, where I speak to entrepreneurs and C-suite managers to learn more about their motivations and challenges building and scaling businesses. So today, as all of you would know, we'll be discussing an important topic that will shape the global landscape in almost all aspects, from investments to career to leisure. Hopefully, we'll talk about some of these things in both the short and long run, right? Sharing their insights on these topics. We have 5 esteemed panelists today in diverse fields as well. It'll be fun picking your brains in a while. And after my short rambling, I'll hand over some time to you guys to introduce yourselves. Right, for those of you tuned in, I think you can also input some questions that you have in the Q&A bar below. So we'll try to address as many of them as possible. Before we start proper, I also want to wish SIAS a happy 25th anniversary. And I heard it many times before, but every time I listen to Mr. David Gerald, founder and CEO of SIAS, share his story about investor rights, fighting over the Klopp share saga all those years ago, it's still a very riveting story. Right, and I'm not sure whether you guys already heard this plugin, but they also released this book, right? Boardroom Knockout, How Singapore's Investor Watchdog Fights for Minority Investors. I think it was launched yesterday. I've already bought my book. Obviously, I haven't read it yet, but can't wait to get it read. All right, so my rambling's done. Over to you guys for your short introductions. Maybe we can start with the person that I see beside me, Mr. Charles.
Sure. Thank you, Dinesh. Hi, everyone. Very good afternoon to all of you. I'm a fellow entrepreneur like Dinesh. I'm a co-founder of a data tech company called DC Frontiers. Our flagship product is called Handshakes, and we use that to help our customers with their compliance needs by tracking and analyzing real-world connections between people and organizations, much like the interlinking that Mr. Tikiap was talking about with the penny stock saga and the trading. So that's pretty much we do as a bread and butter. Hence, our product is called Handshakes. Yeah.
Maybe move on to Mr. David.
Thanks, Dinesh. Hey, everybody. A pleasure to be here. Thanks for having me. Quick introduction. My name is David Smith. I'm an analyst and fund manager on the equities team here in Singapore, where we manage funds within to Asia and across global emerging markets. Pleasure to be here. Thanks.
Thank you. Chin.
Hi, good afternoon, everyone. My name is Chin Yi. I'm from SGX Redco. We regulate the stock market as well as the other markets that SGX operates. So happy to be here and share thoughts with my fellow panelists.
All right, Rajesh.
Hi all, my name is Rajesh. I head the Technology, Media and Telecommunications practice here at Raja & Tan. I'm involved in AI in a big way from a policy perspective. I sit as a member of the AITC technical committee, as well as in the CAIDG, the Center for Artificial Intelligence and Data Governance at the SMU, and the TRAIL, which is a similar body at NUS. We also have deployed AI very extensively within the firm, both Copilot as well as legally trained large language models like Harvey. So happy to share more. Thank you.
Right, and just maybe a recap on you, Mr. Yap. Yeah, Mr. Yap, do you get that? Maybe just a recap on you before we start proper.
Sorry that was on mute. So I spent most of my career in the stockbroking business, frontline, basically facing institutions, HFTs, last 20 years, basically looking at low touch, low latency trading, huge volumes. See a lot of the market down there faced all the global brokers of my clients, as well as the buy side fund managers and so on. Last 3 years, switch into the technology and operation side of it to try and transform the business of a regional brokerage. Thanks.
Very nice. Okay, I just want to assure everyone tuning in that none of these people here are AI or using generative AI. We are real people in front of our laptops today or in front of our computer screens. And let's get started. Okay, so first question, right? It's come to a point, where no one can avoid hearing the word AI in their work anymore, for dollars and cents included, and I'm sure many of you guys as well. But for investing, it can get a little bit more challenging. We may not know where to start. So I just wanted to start this panel by asking all of you guys, the same question. What does AI mean to you, especially in your field, and because you're in all diverse fields, and just maybe keep it succinct to one sentence.
Well, perhaps let me start. I think as far as AI is concerned, it's going to redefine the competitive landscape. It's going to redefine business models. And if you're not on the bandwagon, you could basically stand the risk of being left out as the industry actually progresses.
Maybe I can go next. Go ahead, Roger.
Yeah, no worries, thanks. Just, it's a bit hard to do it all in one sentence, so if I can have two, that'd be great. First off, as a law firm, we see AI as a necessary next step in the evolution of legal practice. This is not a zero-sum game. There are a lot of people out there who say technology companies are going to replace lawyers. We've fought and overcome much, much harder battles than artificial intelligence. What is absolutely correct is that law firms need to adopt AI to see that change. So I see AI as being a great enabler, a great force for change in law firms, and we have embraced it. But now we need to show what I refer to as quantifiable efficiency gains and quantifiable revenue gains. And that's the hard part, as Mr. Yap had shared earlier.
Maybe I'll go next. As our company actually uses AI to actually help a lot of clients in their practical use cases, from our point of view, if I would boil down to one sentence, we often see AI as a productivity booster and a capability enabler that complements human creativity. So it's very important for the last bit because we don't really see AI as substituting humans, but really working alongside them.
Okay, perhaps you can go to David and then end off with Chin Yee.
Yeah, I'll try and be succinct, but ultimately AI is a huge amount of change and a huge amount of opportunity for us as investors. Change in as much as almost all the companies we invest in or look to invest in will be impacted by our AI one way or another in terms of the business models or the products that they bring to market, but also as investors, opportunity in as much as it complements the work we do, as Charles said, allows us to focus on other tasks whilst helping us deliver some research tasks more efficiently and more expediently. So huge opportunity for us as investors.
All right, I don't have anything new to add to what all of you have said. It's really around the themes of opportunities as well as challenges. And perhaps from the regulatory perspective, the opportunities are quite clear. Helps us increase the ability to spot new types of potential misconduct, new potentially destabilizing trends, which we've been implementing slowly in the use of AI tools in both our surveillance and financial surveillance. I think where the other part would be more pertinent to me as a regulator are the challenges. And as with the use of any technology, it is about how we can set the proper guardrails, ensure that the proper accountabilities and responsibilities are there, and that the controls are in place of the users of the tools. And those are huge challenges that we're going to face.
Okay, so I guess we got both the pros and the cons, the opportunities and the challenges. Let's start with some of the opportunities then. So there may be, growing issues with trying to invest in AI specifically. I'm not sure if I'm just speaking for myself, but it's difficult because AI is supposed to transcend all sectors, right? It's not just supposed to be AI companies that you invest in. So in your opinion, what's the most promising sector for AI investments right now? Maybe you can start with Rajesh.
Yeah, sure. Firstly, this is not investment advice. I'm a lawyer, so I think you should understand where I'm coming from. As someone who's very interested in the AI sector holistically, I think there's a lot of focus on software and people who are creating large language models. To me, I think the greatest beneficiary will be those involved in infrastructure, which means people who build data centers, people who are converting data centers from data storage units to data processing units, the companies developing processors themselves. I mean, NVIDIA is just one of many companies that are in the market creating multiple processors specifically designed to accelerate artificial intelligence programming. And then of course, those involved in data analytics and data classification, because what a lot of companies need to do is really turn all the unstructured data into structured data now on a much more urgent basis than before, since the solutions seem to be very compelling. So those are the ones that I think are well worth looking out for.
Okay, I mean, I didn't want to be the first one to put out NVIDIA as a topic on this panel, but I'm glad it's out there already. Okay, so, as a follow-up to that question, big tech companies and private equities have, traditionally dominated emerging investment trends in the space. I find that maybe retail investors only get on the bandwagon much later down the road, especially when it comes into the public market, maybe, right? So as a small retail investor, how do you think we can try to tap on these investment opportunities today? Right, so maybe you can start with like David.
Sure. And although I am an investor, I shouldn't be giving investment advice, and certainly won't talk about single.
Maybe I should have said it at the start of it. Like none of this are investment advice. No stock advice right here. Yeah.
I'll say it
purely our insights.
No, I'll absolutely say that now. It's an interesting question. The public markets are very definitely suited to the kind of topics that we're talking about. But what I would encourage people to do is think quite broadly when we talk about AI, and Rajesh touched on it now. When we talk about AI, there's a tendency to think of that one company, which has already come up in terms of the beneficiary, but there's a whole value chain of players who are involved. If you look downstream, it's folks who are implementing it. Maybe it makes your search for something on the internet better, for example. Maybe it makes it easier for you to click on something and have your parcels delivered the next day. But then if you look upstream, then there's a whole host of companies involved in the hardware side of the business, from developing the chips to testing the chips. And if you go further upstream, as Rajesh mentioned, there's opportunities around data centers and building the infrastructure and plumbing that sits around AI. And then even further upstream, which is actually a very interesting opportunity, are the folks that power the data centers. If you think about the amount of power that these data centers consume and will consume down the road, then the opportunity to power these data centers, particularly with green energy, is really interesting. I'm reminded of a story of the gold rush in California 150 years ago. It was very difficult to bet on a single miner to strike gold. But if you look at who did particularly well out of the gold rush, it was Mr. Levi Strauss and his partners who were making the clothes for people to make as they dug for gold. So sometimes it's as interesting to bet on the picks and shovels business as it is the downstream business. So I would encourage people to think of things that way rather than through a narrow lens.
Yeah, so Charles, like as an entrepreneur, like how do you think about, like, since you're right at the forefront of the industry, I guess, how do you think about like investment into that space?
Well, I had a lot of interesting to share, things to share, but actually David said everything I wanted to say. So I echo exactly what he said. My perspective is exactly the same. I look at the whole supply chain, upstream and downstream. Especially from our point of view, many of our customers comes from all walks of life and all sorts of industries, ranging from government agencies trying to improve the tedium of bureaucracy, all the way down to new industries that spring up due to the advancements of technology, right? E-commerce, disruptions in banking, even disruptions in the way that people conduct their regulatory and compliance activities. All these were not possible like mere 10 years ago, are now becoming possible now. So the landscape is rapidly changing. But that's really what's exciting about it. So I definitely do echo the fact that while you might not be able to be on the bleeding edge of the AI technology directly, but you can still focus on things that you understand and see how that get disrupted or benefiting from these technological advancements and how those industries will transform. And those are opportunities as well.
Right. Actually, the one area that and this is just from my Google expertise, right? That we are on the bleeding edge. I tried to Google for biggest AI companies in Singapore, and I saw that there are a lot of AI companies at like what you say, that bleeding edge. They are already in Singapore. They may have been started obviously outside of Singapore, but they have the presence in Singapore. So this is like from the traditional big boys, right, in the technology space, like your Microsoft, Google, Amazon, Apple, Facebook. They all have like presence here, even like Tencent, Alibaba, Pinduoduo, and even niche players, and this again, I'm going to stress, is Google, not investment advice. Guys like Palantir, Snowflake, Databricks, kind of the maybe like what you're alluding to, picks and shovels. They're the ones like trying to get into that space. And others, I'm not going to name all of them, but Snap, Workato, Smartly. So a lot of names are in Singapore, and I'm missing a lot out as well. So I guess, Singapore as a country seems to be in the middle of the AI boom, right? And an increasing amount of our work may be to do with companies at the forefront of AI. So one question that I have is, should we also, or is it also wise to pour our investments into AI, given that maybe our jobs are so allocated into AI space already?
Okay, maybe if I
If you
can
wanna-
take that, yeah.
Go ahead.
Yeah. So short answer is I think yes. Because you actually have to look at AI as something you have to do. You can't not do it. If not, then like I said, you're standing still on a treadmill and then you're gonna fall backwards. I think the key thing to really think about is that how it fits into the ecosystem in which your company operates, or how it fits into your business model in the ecosystem context. And there's two general ways to look at it. One, you can look at it from a productivity standpoint, which is really how you save costs, make it more efficient. But the upside to that is somewhat limited. The other area where I think a lot of people would want to invest more is really how it helps to generate revenue. Because actually, when you save costs, the most cost you can save is what you start up with. If you have $10, the most you can save is $10 to spend. But in terms of generating revenue, if your revenue is $10, if AI can make that 20 or 30, I think that defines the potential for you to invest. The challenge, therefore, is, like I said, the ROI aspects. And today, I think globally, for the biggest companies down to the smaller ones, the amount you invest, is it in a sustainable business model? So let me give you an example, robo-advisory. The robo-advisory business was big 10 years, 8 years ago in terms of starting to climb up. However, you could argue that actually that model is struggling because the new technologies have come up with AI have actually superseded it, so that the traditional robo-advisory model is actually being outdated, superseded. And actually, do you really need that given the possibilities of LLMs and so forth? Machine learning, deep learning would actually help supersede the starting models of robo-advisor. So we've just, I think, recently seen in Singapore even a robo-advisory startup. 8 years they survived, tier 1 clients, but essentially they actually couldn't make it. And then actually that was because I think the market also has moved on. So I think it really look at it, payback potentially greater on the revenue generation rather than the cost saving side. Charles, maybe you have your thoughts.
Sorry. If I can add on to what you're saying, I mean, what you said is certainly reasonable and sound, but taking a step back, can we really say that we can avoid not investing in AI? This cycle that we're going through seems to remind me when I was a young boy watching the tech boom when internet became a thing. And back then, if we were working in a tech company, then if we ask ourselves, we're already working in a tech company, should I then invest in tech? That today we will laugh at ourselves. So I think AI is definitely here to stay, and it will continue to be a stronger and stronger part of our lives. So even if you're working in an AI-based company, or being in Singapore, where we seem to be, in the center of a lot of these things, but I think we still can't avoid it. We shouldn't.
And I think the key thing is really AI and so on. Nice to invest, etc. But are you ready? I think that's the other big question. Your readiness comes down to your data structure. It comes down to your content, the way it's kind of kept. So you don't have a proper data warehouse. If you got unstructured data for which you need a lakehouse solution, etc., right? If your data is not ready, and if your data is all over the place in silos, essentially you could invest in AI, but because the feed into it, the key data is not ready in a way that you can extract the most out of it, essentially your upside is going to be limited even though you have this technology, because basically what goes in is problematic.
Indeed, yeah. As with any investments, obviously we would have to approach it in a responsible manner, make sure that we're ready to actually reap the benefits from it. I agree with that totally.
Yeah,
Yeah.
so the investment actually not necessarily in AI, but actually in your data setup before you want to get into it.
Yeah, I was gonna
Back to you, Dinesh. Yeah.
I was gonna touch on that. Like before we like go too far down that rabbit hole, I wanted to pull us back into like, hey, you know, maybe a lot of these things, you know, entrepreneurs or businesses or even investors themselves do not fully understand it. So like another investment that, you know, we can actually make is in ourselves, you know, investing in the knowledge to almost future-proof our careers as well, you know, as our investment decisions, right? That's the peripheral benefit there. So what can Singapore employees do to kind of better understand AI? So as in Mr. Yap's words, you know, don't put in problematic data sets into a system, right? So that, you know, both the future of work and if not the world, you know, that we can invest in as an investment team. Yeah, like what can companies and what can employees do? Sorry, what can employees do to better understand AI in Singapore? So maybe I want to pull in Chinny into this conversation.
Yeah, I thought maybe I can approach that from our own experiences with the AI tools we implemented over the past 5 or 6 years. And we put in an AI module in our surveillance systems, as well as in our financial results monitoring systems. So in both cases, the journey was quite similar. Of course, you had the issue with data, unstructured data, obviously, and you have to first invest in solutions, also AI solutions, ironically, to get into a structured form. The second part then is the back-breaking part of validating the results that the system produces through backtesting and through test cases to make sure that what it produces is reliable and, most importantly, explainable. Because obviously in our line of work, we have to be able to explain the conclusions we reached and the tools that we use. And thereafter, of course, you put it live, and there has to be a continuous iterative process of retesting, revalidating, and hopefully improving the results. And that's where the learning part is beautiful, because the machine programs can refine itself under proper supervision. So what we've learned from that is, first of all, AI may not make your life easier. It certainly hasn't, but it makes your life a lot better in terms of the quality of output and the increase of capabilities. But that much is clear. And that's, I think, the one thing that, in terms of attitude that employees or anyone needs to have when they approach this, it is not a tool to take away and to take away certain parts of your thinking or your process. It's a tool to advance your process and let you have the time and the foundation to do new things. The second part is also that you always must adhere to the principles, in our view anyway, of transparency and accountability. You have to be able to explain why and what it is that was delivered from that process or from that AI solution that you have used.
I'll be happy to chip in on this bit as well. From a law firm perspective, our key issue is client confidentiality. So, you know, as an employee, let's say in an organization where confidentiality is high, if you're in a bank, accounting firm, law firm, etc., you need to take steps to ensure that you understand and you're accountable for whatever you put into a large language model. Be very selective in terms of what large language models are available, which is why I strongly of the view that any of the firms that do confidential work have a responsibility to install enterprise-ready solutions in their organization, because you can't just tell people don't use AI. They will. It's in our phones, right? You don't need to try and ban access to ChatGPT in the office and say, okay, now no one can use it. They will use it. So there's an obligation, I would go so far as to say, for employers to ensure that they put before the employees the right type of tools for them to effectively leverage generative AI. But AI is not just about generative AI. I think, you know, if you go back, there's a bit of interest now in this new concept of agentic AI. Agentic AI predates generative AI. It's not a new concept. It's been around all the way back from machine learning and beyond. Agentic AI is where you're now using large language models to do things and not just to say things or to give you responses, to be able to tie up with third-party products. I think employees need to think about how they can really leverage this new technology using agents. And this is not the new construct again, like say it's already out there. Microsoft just announced Copilot Wish 2 or version 2, whatever, recently. So these are not going to become mainstream. So I think it's incumbent on employees to constantly stay updated on what the latest trends are so that their skills remain relevant. This is a very dynamic field. If you think you know how to use ChatGPT and you call yourself an expert in large language models, sorry, that's not what's happening, right? You have agentic AI. You need to understand how to leverage that. You need to think more about the latest reasoning models that are coming out through ChatGPT 4.01 or -1. These new models, again, have redefined the way in which large language models are going to work. So as an employee, I think some are feeling very adrift right now because it's easy for me to sit here and say study the best. But if you're not technically an adept individual or a lawyer who has technical training and understanding, you won't be able to follow what's happening. And a lot of employees out there are feeling very lost. And I think employers have a responsibility to put in place governance documents, informing employees what are the do's and the don'ts. Don't expect employees to be able to do it themselves. They have to be responsible in terms of allowing access to enterprise-ready large language models so that the risk of users taking their sensitive data, bringing it home and running it on their favorite free GPT platform cannot be tolerated, right? Because any of that data, once it goes in there, it is potentially subject to being ingested and trained on. I'm not saying it always happens, but it can. And that risk is not one that a responsible organization can take. So just some of the tips. Thanks.
Yeah, actually, like what you say, I kind of like just had a conversation with an ex-colleague yesterday. So the point was, whether we can input financial data into a bot like, ChatGPT 4.0, and will that information then, which hasn't been released into the public, to create whatever you want, press releases or financial slides and PowerPoints as such, will that information then be considered like leaked, right? No one really knows. I don't have a proper answer. Like I don't think so, but like what you say, it could be already used and even like tapped on for future queries that other people might put in, right? So I'm not sure about that myself. Right, so David, I just want to like pull you into this conversation as well, because interesting enough, we did mention about robo in Singapore, and since you're in the investment space, right, robos in Singapore, they seem to have maybe the upper hand about 8 to 10 years ago, and then today maybe not so much because a lot of these technologies have become very mainstream, and even platforms that were not considered robo advisories have already these same digital tools already inserted into the platform. So what's your perspective from that stance?
It's not a space that I'm terrifically familiar with as an institutional investor, but many of these platforms face the same issues that many of us do in other industries, that if you have an edge in one generation of technology, soon enough that'll be commoditized and eroded, and you have to keep moving forward. So those that have rested on their laurels, as it were, or stayed still with technological change will be the ones that feel that heat of competition, and those that push the envelope in terms of new technologies and new ways to enable investors to make better decisions, faster decisions, will be the ones that gain trust, provided it's done in a way that respects your privacy and security. And so it's not surprising, if indeed that is the case, as you say, that we've seen some robo-advisors maybe slip away in terms of competitiveness. But again, as I say, not a space I know particularly well.
All right. Okay, and so now for the next question, I'm going to zoom out a little bit again, and just talk about like, Singapore, while, hopefully we are a growing hub for AI companies, the biggest companies in AI are usually started, created, ideated in the US, China, for now, at least, right? So from an investment perspective, from a retail investment perspective, is a broad investment in these markets sufficient, or do retail investors need to think about specific allocations to AI as a team in their portfolio? So
maybe I can take that
on companies.
Yeah.
So like, what's the retail perspective here as well?
Yeah. Okay. So from a broker's point of view, generally I think starting point is I try not to overthink things. Otherwise, you get very complicated and confused in your head. So what is the problem you're trying to solve? It's very important to define that so that you don't end up having a solution for which there's no problem. So you think too broad, you find that it's very hard to say, hey, it's worth the investment. So my suggestion, for example, is deploy Gen AI in everyday tools, bite-sized applications, something that's a specific problem for which you have a specific answer. It can be efficiency, productivity aspects. It can be increasing the number of clients onboarded. So we talked a little bit about customer journey. Specific example, stage 2, customer onboarding. You take on a customer, you need to do due diligence. You need to do enhanced due diligence. Old days, the guy declares all his background, etc. You got to go and dig up. Today, essentially, you're plugged into databases. You're drawing the data. You're looking at actually matches. You're looking to explore and investigate matches to see whether they are actually relevant or not in terms of bad hits, etc., etc. Which means that actually you can plug into more and more databases for you to actually, from an audit point of view and from a regulatory compliance point of view, demonstrate that you actually have set certain standards of thoroughness before you take on a customer, etc. This, I think, has AML implications. This has basically got a lot of other implications. And this is very one specific area where you can say, this was a weakness I had before. This is how I'm addressing this to strengthen my process and so forth. So I think getting the ball rolling and easing teams this way into using the technology also helps to shape the culture, because people can see, hey, you know what, I actually can do a better job, but actually put in less effort, because what you're doing is automating low-level tasks. And then let the brain and the human take on what else did we miss that actually was too tied up last time to think about and so forth. So I think this is one way, integrate AI into your everyday tasks. That actually has very measurable, quantifiable results rather than a general ROI. The other is once you start doing this, you reshape your critical functions. The bite-sized deployments actually can allow you to reimagine the process and workflows when you start to combine these things. Just now I mentioned stage 2, 1, 3, 4, and 5 stages. You can expand that into entire customer journey, because actually the fact is nobody wants to take the cost allocation of this. And when you actually have to tweak your data, and then you actually have to take an advantage out of the effort you put in, the question is, all the business users can say, I don't want to pay for it because that's CAPEX. And then that's going to affect my P&L for this year. You have this cultural, I think, pushback. And essentially, bite-sized, quick wins, it basically shows that there's new way of doing things that actually has a real tangible benefit, get more business in, stop losing more money, etc. Then I think you get people on your side. So bottom line,
now
do
that
it
you
small,
brought this,
yeah.
And now that you brought up this stance from like a broker perspective, right? So personally, I've also seen many brokers or many digital platforms, put out content. They've plugged in. I've seen some of them plugged in, ChatGPT into their platforms, using AI screeners and such, and also risk profiling for that. In fact, I've also read on other publishers, not at dollars and cents, I'm going to caveat here, entire articles say, were just generated based on, an AI stock screener saying stocks that we can invest in. So I guess from your perspective, maybe you can go to David for this one. Like in your perspective, how much faith can we put into such AI tools to guide a retail person's investment decisions?
Good question. I think, as with anything, we've touched on this before in terms of knowing what you're doing. I'm always hesitant to use tools as a replacement for judgment. I think we talked about tools earlier as a complement to human research and human judgment. So even in our professional lives, there's things you can do to harness AI to help you with your research and to help you with your decision making. But I think the onus is always on you as an individual, as an investor, as a lawyer, whatever walk of life we're in, to do your own due diligence, understand in our context, understand what you're investing in, understand where in the value chain you're investing, and understand why you're investing there. I think one of the questions that you've asked is around allocations to AI, and it's an important question that I think many are grappling with. But then the question we should put back to people is, what does an allocation to AI look like? We talked about that value chain. Where on the value chain do you want to be? Do you want to be in a single investment in the one company that everyone is talking about, regardless of valuation, or do you want to be across that value chain? So we're talking about an allocation to a single stage of the value chain, and we're talking about an allocation across that value chain. We're talking about dynamic allocations moving across the value chain. Or do we even need a perpetual allocation to something regardless of valuations? And so I think it's easy to say, yeah, I'll put some money in AI and see what happens. But I think the best investment is where you've done your due diligence, you really understand what you're doing, and you're able to make a judgment around risk reward and where valuations are. Sorry, very boring advice, but I think it's important not to lose sight of what we as investors should be doing.
Yeah, exactly. And maybe that's like a good segue, right? So far, we've been discussing mainly the opportunities in AI as a theme or as a topic, but there are also risks associated with gaining exposure to the AI theme, right? One, from even an employee's perspective, given the rapid pace of technology change, could what you are doing or learning today be outdated by the time you get really good at it? So the question I have then would be like, would an up-and-coming company be just as quickly disrupted? This applies to technology as well, but would an up-and-coming company, be just as quickly disrupted or even suddenly face like intense regulatory pressure that, as a small startup, you may not be equipped to manage in the first place, right? So maybe you can pull in like Rajesh for this one for a start, because from a law's perspective, and then maybe even Chinny can give like a regulatory perspective on this.
Yeah, I guess I think one of the uncertainties right now is whether or not this area is going to be regulated. I think the EU sort of jumped the gun a little bit with the EU AI Act. I think Singapore's approach has been more pragmatic. We focus on creating standards. So what AI Verify Foundation does with NIST in the US, for example, to create standards that we can use from a crosswalk perspective to understand and make your solutions compatible with the standards and expectations in each of the jurisdictions. Coming up with model governance framework will provide guidance. But all of these things are being done because of the fact that there is risk in the creation, the deployment, and the use of AI systems. And there are different risk issues in each of these cases. If you're a developer, if you're one of the large players, and also some of the small language model players out there, you need to remember that you are taking significant liability in terms of making your tools available, and to make sure that you are addressing those risks. People are going to rely on that tool. And just like what happened, to Meta in the early days, it's not enough to just have terms and conditions and get consent from people, because nobody will remember that they've signed these terms and conditions, which gives me a lot of pain, because my job is to draft many of these terms and conditions that many people just click and walk away from. But they are legal terms. Not good enough, because it's now moved in Singapore and many jurisdictions away from compliance to accountability. That is the mantra now in data protection and cyber. And that will be the same approach taken for AI. So accountability means you take responsibility. Responsibility means risk. It means liability. That's the way it works in real life. So recognize that you have that risk. If you're a deployer, then it's the same issue as many of the middlemen involved in system integration, who take significant amount of risk, and then the developer will just exclude all liability and say, well, if anything went wrong, it wasn't our system, it was the manner in which the system was customized for your use. And there are many of these middleware people who will be involved in your AI deployment. Do remember that. And these people are taking the bulk of the risk. Many of these companies are not well capitalized. They will fail if they are sued significantly. So bear in mind that there's significant risk on that front. We've seen that happen multiple times with the early days of huge SAP and Oracle rollouts. It's always the middleman who gets the brunt of the liability by design. And then the end user is left with nothing, right? Because it's not worth suing these guys. So then let's look at the user risk. I mean, like always, the buck stops right at the bottom of the value chain. The user is the one that uses the solution, facing huge risks. If you're in an industry like in law, it is zero tolerance. Let me be clear. If there's an error in your legal opinion, you take full risk and responsibility and liability for it. And there are more than enough examples of professionals who have chosen to rely completely on these systems without validation, without verification, and independent research. All this points to negligence on the part of these individuals. And that is a huge risk as well, being negligent in the manner in which you're doing your work. Finally, I think, if you look at it in terms of backlash, there's a lot that's going to happen. We're now at the start of the down cycle. I think we're already on the down cycle. If you ask me, what happens at the down cycle? All those people sitting back, being quiet, will now come out and say, I told you so, I told you so, I told you so. These same people disappear when the cycle goes back up to the steady state. But they'll be out there now, the newspaper, the media is going to switch over from, wow, AI is fantastic to, oh my God, oh, AI is terrible. How the heck do we allow this technology to be released and unleashed upon the world? Media will say what sells, right? So they're now going to the media down cycle. There'll be a lot of negativity from an investment perspective. Investors are going to be completely confused because, we're looking at the potential value of these platforms versus what you read. There's a complete dichotomy of views. So be very, very careful in your due diligence on that front. Now, in terms of final point here on this, the AI technologies that are being put in place now are also ingesting a lot of data. So be aware in terms from a liability standpoint, in terms of client confidentiality, as I shared earlier, but also in terms of your own secrets, your own trade secrets. The way in which you draft a prompt, for example, shows what it is that you're trying to seek. There's value in that prompt. The best results you get from large language models are from the best drafted prompts. Question, of course, is who owns the rights over these prompts? By doing the effectively telling the owners, the users of the platforms or the owners of the platforms as to what it is of significant value to you as an organization. This is no different from the early days of Google when people used to type in a query into the Google box and Google then gets significant amount of insight as to what is your interest at this point in time. It's the same playbook, right? So do be aware of that fact. Most of us will move into a steady state where, well, it's the way it is, and then we accept it. And I'm quite certain it will happen for AI as well. No one thinks twice now about queries that you put in a Google box. No one will think twice about the queries you put into a ChatGPT box 6 months down the road. So those are just some reality checks and liability issues to be aware of.
Yeah, I think just hearing that ties in very nicely to what Charles brought up earlier. Like when he was in the internet bubble, everyone was saying, oh, how could you invest in it, or how could you stay in it? But years later, you still should have done it, right? Something along those lines. Okay, Chini, so from a regulative perspective, right? I'm not sure if this is the exact question that you might be wishing to answer, but I guess there may be a lot of companies who want to list, and then maybe there's a regulatory perspective on the regulation that happens after that, especially from SGX side as well, in terms of how they can do that.
Yes, thanks, Dinesh. So, I mean, at the core of it, our jurisdiction is a disclosure-based regime. And a lot of that involves, of course, making sure that the necessary information is given to the investor, and then the investor has to make sure that they understand. The first part of that is that the market is there to enable access, risk access, and capital allocation. So insofar as you said, if there are aspiring companies wishing to list and they are active in the AI space, we do have obviously listing criteria. A certain size, a certain sustainability of business is required. But overall, the main focus is that the risks of the business and the explanation of the business model has to be clear. And thereafter, then the market is there to make its judgment in terms of market discipline. On an ongoing basis, that focus on Caveat Emptor is that we're there to empower the investor. And our focus is a lot on, first of all, disclosure, especially when the company takes on material risk or material changes in its businesses. And secondly, also, I would say that from a top line perspective, focus not just on the business, but on the people running the business. Because the quality of the board, the quality of the stewards of the investors' capital, that is of a key importance. Over the years, we have put in many, many measures to try and ensure that the quality of boards get improved and is maintained. Tenure limits on independent directors, requirement for diversity policies to be in place to ensure that there's a wide range of views and expertise that are available on the boards. I think these are hallmarks of a well-run and a company that has a higher chance of success that investors have to take a look out for. I think on the more specific note, AI investments won't be just limited to new potential listings. Many companies that are already listed may want to pivot to this new area. And that's where a focus on their disclosures and a focus on the people running the companies and how they talk, how they explain the business potential and risk, a focus on how they execute their plan as the months and the years go on. Those are crucial. And that kind of vigilance, that kind of duty, as David was referring to, it sounds boring, it sounds fundamental, but it's what really allows you to pick the winners. And above all, you have to be agile.
Okay. I mean, when you were articulating that, a funny thought just popped in my mind. Like, I think it was just within the last 6 months or maybe shorter, 3 months. Like, I read an article about how many times each CEO mentioned the word AI in their annual briefing. And then based on that, it was just an article that based on that, they track their share prices. And I don't know how true it is, but they found that the more times you mention AI, the higher the stock tended to trend in the days after that. Not sure how true that is. You guys can find that article out on your own and read it. It was an interesting article. Okay, I before we go on, I realized there was some questions already. I was a bit distracted with your great insights. So I just want to pull us back to answering some of these questions. The one of them is based on this topic. So it's to Rajesh. To what extent can the T&Cs help protect the service provider, or are they depending on having low paid up capital to protect the initial founders or investors? Are there conditions where the corporate veil can be lifted and individuals behind the software and service providers sue?
Well, the service provider will certainly rely on their terms and conditions. And especially if you're looking at it from a B2B, business to business perspective, I think you need to go in there and make sure you get your due diligence done. The funny thing about today's world, where almost all services are rendered through SaaS, software as a service, cloud-based solutions, is a lot of the terms and conditions are not negotiable, right? They put in a standard click wrap type terms and conditions. Just because they're presented that way does not in any way mean that they cannot be negotiated. So that's a key point to bear in mind. And you do need to look at negotiating those terms. But coming back to your core question, can the company rely fully on the terms and conditions? If it's B2B, I would largely say the answer is yes. If it's a B2C model, so you're an individual and you use the system and you've been wronged in some way, then there's the possibility that, these terms and conditions may be seen to be, or some clauses may fail because they do not comply with the Unfair Contract Terms Act or other common law principles that exist to ensure that individuals are protected against large corporations. There are also things like the consumer protection rights, etc., which are separate statutory rights that individuals have. Statutory rights always will trump contractual rights. That's the principle. So there will be, and we're dealing with individuals, be aware of what the individual's rights are and address those specifically in the terms and conditions. Now, the other thing to note is, for in terms of lifting the veil, that's a very complex question, not something I can deal with in 2 minutes. And not something I want to go into, but I can maybe just very briefly say that if you're seeking to lift the veil, you need to ask yourself, what veil are you lifting and who are you trying to go after? If you're lifting the veil to go after the investors, that's a very futile exercise unless the company itself is actually in distress or has declared bankruptcy. At this point in time, not many of them are there. I think fundraising in the market today, as you know, it has predominantly been dominated by AI companies, to the detriment of other deep technology companies who actually have a lot more technology of great value to bring to the market. But it is what it is. And therefore, I don't expect many of them to go into distress at this point. I expect that distress scenario to come up in 2026, 2027. That's when lifting of the veil will become a relevant consideration. Even then, I would not propose going after things like necessarily, let's say, the rich investors who have invested in the company, because it's going to be very difficult for you to show that these investors were anything other than passive investors. So I know that's just one particular perspective. There are many different grains, but that's all I can do in 2 minutes.
All right, great. Thanks for that insight. Going back to AI companies and some of the challenges that they may face as companies on their own, I want to ask that maybe Charles, as an entrepreneur in the AI space as well, and maybe even Mr. Yap will have this perspective to share. What challenges do AI companies today face in terms of scalability?
Maybe I can speak from my own company's perspective, what kind of challenges we face. One is definitely regulation, as been by some of the panelists earlier before. We're still in a very nascent stage. So we're still figuring out how much regulation it is enough and what sort of regulation should there be. And that is a very important factor for us to consider because, depending on how regulations are imposed, A business model that is legal and working one day may suddenly shut down and not be acceptable anymore the very next day. So there is always a shadow overhanging us as we operate. But that can be mitigated by a number of ways, including the way in which we follow fundamental principles of ethics and responsibility in treating our stakeholders. And so therefore having greater confidence or belief that if we're doing the right thing always, then regulations should not be clamping down on what we're trying to do. I think a second key area of risk, I'm not sure whether many are aware, is that especially in the deep tech AI space, we've gone through a huge hyperinflation over the last couple of years in terms of labor. Talent is at a premium and has ever been. The number of millionaires we mint every year from this industry is just crazy. But that puts a very huge strain on otherwise viable business models. Labor costs alone can make that untenable. So that is a risk that we actually deal with every day, and we have to try and mitigate through all sorts of ways, right? Complementing it with lower cost centers, with higher productivity setups and things like that. Last but not least, I think we've said that in many different ways, but I think it's still worth saying, the fast changing pace of the innovation itself is also a big risk, because technologies that are valid and leading edge today may be already obsolete in just 2 years' time. I mean, if you think back, GPT was only introduced less than 2 years ago. And the underlying architecture, which is transformer, was only first mentioned in a paper back in 2017, when under the paper, attention is all you need. So that's not that long ago. And we've come so far since then. So can you imagine if we give ourselves another 5, 10, 15 years later, the world will be very, very different. And the leaders today may not be, even existing tomorrow. Yeah.
Well, for myself, I take a problem-solving approach. So I think it's not just a question of the challenge of scalability. By problem-solving, I think you tend to always need to look at things in a pyramid, get the basics right first. So question one is, do you have the right solution architecture in place? Because you don't have the right solution architecture, essentially you're going to come up with a lot of very fundamental problems as you go through an implementation stage. So the enterprise architecture approach, for example, right? You need to get infra, data, and apps correct, and then you have the business architecture. So these 4 areas, the infra architecture, the data architecture, the app architecture, and the business architecture need to be all very much looked at as an integrated part of the entire business. A lot of times, if you just look at tech separate from the business, it's really going to be a challenge. So quick example, when I look at that transformation, what essentially we did was go off-premise, right? A lot of our processes, we moved on virtually and into cloud, which meant that about 300 of processes essentially went into cloud. But what it also meant is that it changed and opened up a lot of different opportunities. Your data, like I mentioned, you don't get it right in terms of your structure, you end up having a lot of problems to solve. So where the world, I think, is moving is you find that as technologies evolve, the focus switches. Used to be the business bending is processed through basically technologies and their limitations. Where I think we are going now is that technology now flexes with the business needs. And you need to see the two together. So that's where I think the 4th leg of enterprise architecture, the business architecture comes in. The business people need to think in terms of the technology implications. So really, I think scalability is a little bit more down the road in that journey, but you need to get your solution architecture right, and you need to get the mentality within the company acceptable of where you want to head in this journey.
Okay. I've been made aware that we've come to the end, 4:30, but I think all of us maybe will want to hear one last piece of takeaway from you guys. And at the start I said that we'll try to answer as many questions. Unfortunately, we didn't have too many questions, but there's one more that we haven't answered. This goes back somewhat to an earlier question that we did try to answer. So I think it's a fitting last question as well. So given the quality, this is the question, right? Given the quality of the output for the AI engine is dependent on the quality of the data, and many of the data vendors tend to want to have exclusive data features or licenses. How realistic is it for users to trust the output or have to keep making adjustments for the output. So one example is, different vendors or models for ESG data, or comparing funds that use GIC gigs sector data versus non-gigs, and others that, they put up as examples. So how much tolerance do you need to give to the output of the data? So I guess everyone probably got their own perspective. I've been also told that Charles has a unique perspective on this question.
Yeah, well, I have one advice for that. Always have a healthy level of skepticism. No matter how good something looks like, always double check, always verify. I think that's always the prudent thing to do.
Okay, yeah, and maybe if like David and even patient perspective have like thought processes on this. Promise you this will be last question. You won't be burdened with more for this.
Well, I mean, my perspective is just it's no different whether you're using AI or a bunch of human researchers, and the limitations of data, exclusivity of access, and what you can rely on, they're inherent, right? And at the end of the day, some level of subjectivity and judgment is required. And it really is the skill of the ultimate analyst and decision maker that's key here. At the end of the day, it is just a tool. And as long as we are aware of the limitations of the tool, you can make very, very good decisions, and you can use the tool to the best of your ability.
Yeah, thanks for that. I mean, when you're saying that, I just realized, even SGX as like a company has to deal with this data, right? Because you have like ESG scorings or gradings for companies. So like there may be variations in terms of different data put into as well. So you guys probably grapple with it on a daily or at least quarterly basis.
Yeah, if I can just give a short 30-second plug, we have been putting efforts to require more uniformity in terms of ESG data. I think that helps everyone, and this question perhaps proves the point that more uniformity in the data allows for more uniform processing and better outcomes for the whole industry. And that's what we've been putting forth efforts in over the past few years.
Okay. Yeah, David, your perspective, because one of the examples also is like comparing funds that use gig sector versus non-gig sector data. Like any perspective on that?
I think it doesn't matter whether you compare funds or, as I did the other day, asked Meta AI to compare Bak Chor Mee stalls in Singapore, which is the best and where can I go? Trust your own research and due diligence. Nothing will replace your own work. It's a co-pilot.
What's the answer, David?
We'll all have different views, but it wasn't the Badok one that everyone says. But let's catch up offline. But trust your own due diligence. It's a co-pilot. It doesn't replace your own work. So have some skepticism and cynicism. Use it, but don't rely on it.
All right, Mr. Yap, any thought processes, and maybe the last word from Rajesh. I see that you have your hands raised. I'm not sure if you accidentally clicked that. I think you want to have the final say. I'll give it to you.
Well, sure. I think from a problem-solving perspective, right? Again, go back to what problem are you trying to solve in a B2B2C model? What does a C really need? So all this data, what is really relevant, rather than what the business thinks is relevant, is actually what moves the needle at the C level, the end consumer, the end user. So I think you're going to have different types of data, obviously, and so on, but does it really matter? So it's just like, does the end consumer really need research? That's very important. Now, if he needs curated information, personalized delivery, because that's more relevant, then the kind of research, the kind of data that's in a research report becomes less relevant than I want to hear the good, bad, ugly in the 5 stocks I own, because that's actually what's important. Get back to really what problem are you trying to solve? What need are you really trying to meet? And I think that maybe helps the relevance of the data source.
All right, Rajesh, last words.
Yeah, I think we need to also take responsibility for how you actually use these AI solutions. There are many ways of working around the issue of inaccuracies. Number one is retrieval augmented generation. There's a need for organizations to know that you don't need to trust what is in the internet or what the engine has been trained on, but to limit the scope and the focus of those engines on your data, on your specific section. So as a lawyer, for example, when I use something like Harvey, I wouldn't ask Harvey, tell me, the 5 most relevant PDPA clauses for the set of problems I put to you. I will upload a copy of the necessary statute. It's used as for legal purposes. So it's well within copyright law for me to do that. And then I'll ask the engine to just limit its analysis to the version of the statute that I've given to you. Don't hallucinate, don't go out to the internet and find stuff. Tell me based on the analysis of that system. Number two, if you're in a specific sector, don't use necessarily generic large language models. There are sector-specific pre-trained models, like in the legal sector and the accounting sector and the medical sector. There are already accounting trained, legally trained, and medically trained large language models, which will give you much more accurate output. So be aware that there are these solutions and workarounds. And from a legal perspective, if these are available in the market and you don't use them, then the question will be, why didn't you use those legally trained models? And then you're fully liable in terms of errors that you have relied or chosen to rely on from generic large language models.
All right. Okay. Thanks, guys, for your great insights and inputs into the questions that I posed, and also from the audience.